today we'll be looking at market structure, right? So market structure is probably the first thing you need to know when it comes to trading, and everything else follows after it. All right, so what we're going to be talking about in this is we're going to be talking about what is market structure first. We're going to be talking about three types of market structure you see within the market, and the reason behind each structure and the way it moves. And that's probably is the most important. You need to know the reason behind every single move. So what is market structure? Market structure is when we look at a previous structure, a previous recent structure, and see if price breaks above it or below it. That's basically is it, all right? So let's get into the first type of structure you will see in the market. First structure you will see in the market is trend, and I will show you how it looks like. Trend is when price is doing something like this, right? And this is the uptrend, and it can look like this on a downtrend. So what is price doing? First, price is creating a so what is price doing, guys? So here is our low. The reason why it's a low, because we do not know a previous structure. So this is the first structure we see right now. Okay, so we're gonna type this L. Here is a high, because as I said, we don't know a previous structure. This is our high. This is our high and low. So as it hasn't broken the low here, this is a high and low. Okay, sorry. This is high or high. Why? Because it's broken the previous structure. All right. And then it goes same. So you guys should know now, this should be the higher low. This should be the higher high. This should be the higher low. And this should be the higher high. And this should be the higher low. This should be the higher high. Sorry. So we know uptrends look like this. So why does this happen, right? Firstly, this is our previous structure. This area is a previous structure. All right, so we're gonna look this into supply and demand sense to understand why higher highs and higher lows are formed. We can see an uptrend is where it's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. However, the downtrend looks very similar. This is our high. This is our low. This is our higher low. This is our lower low. This is our higher low. This is our lower low. Higher low. Lower low. Higher low. Lower low. All right. So as you can see, trend. With uptrend, we'll see higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. With downtrend, we'll see higher lows, lower lows, higher lows, lower lows, higher lows, lower lows. That's how you see in the market, all right? So now we're gonna see why does it happen. What is the actual reason behind it? So we're gonna look this in terms of supply and demand. Okay. All right. So first thing you need to know when it comes to supply and demand. Demand is when price is cheap, everyone wants to buy it. Supply is price is way too high and no one wants to buy it. So as you can see over here, right? Price was quite cheap, so people bought it. When this structure got broken down, price getting higher, and no one wants to buy at these level. Why would you buy when the price is already high? You guys understand? So when the price is overbought, no one wants to buy it. Then sellers comes in at a cheaper price and they buy it to make the price go higher. And then when the price breaks this structure, you know, people are still interested. So what actually happens? Price comes to overbought area, no one wants to buy it, sellers come in, push the price down. So yeah, let's see if that moves everything. All right, so yeah, this is what you guys need to know. So again, I'll show you. This is our previous structure. Price came here, people bought it around this area, pushing the price up, up, up to the point where no buyers wants to buy it. It's way too high. Sellers comes in, push the price down, so more buyers can come in because no one wants to buy on an overbought level. Okay, let me give you guys an example, right? So let's say I buy an apple for £50 today, and over time, let's say in a month time, there's more demand, right? So in a month's time, the price increases to, let's say, £100, double this value. Then what actually happens, right? If the supply is more than demand, the price will decrease. Meaning, if the price is overbought and there is more supply than demand, then the price will decrease, which is a retracement. And then if we have more demand, then the price will increase further, else it will drop. Alright, so downtrend is exactly the same. So as we don't know our previous structure, right? We consider this is a high, this is low. This is, so price, whenever structure breaks the low, consider price to go down. So price goes down, right? To a point where it's oversold, you cannot sell it anymore. So buyers are interested, they push the price up until sellers wants to break this structure, and this structure is broken, then price is oversold again, and then buyers comes in. Hence why whenever structure breaks, price rejects. Exactly like this. So I hope you guys understand the trend. Alright, so I'll show you what a trend actually looks like in candles. So this whole move, right? This is how the candle could look like for this move. So this could be our 1 hour time frame. The price moving, making higher highs, higher lows, higher highs, higher lows. And then on a daily candle, this is what we can expect price to do. So I hope you guys understand this. And we can expect this candle, the red candle, to be a daily candle for a downtrend. So this is a daily candle, and in 1 hour time frame, we can see higher lows, lower lows, higher lows, lower lows, higher lows, lower lows. Okay, so the second type of structure is counter trends. They're also known as reversals. Okay, so a counter trend, so a counter trend could look like this. Price is making higher highs, to a point, price start breaking lower lows. Okay, this is a counter trend, and we can also see something like this. Over here, prices start making higher highs, higher lows, higher highs, higher lows, which tells us the trend is up. Then price failed to break this higher high, which is this high. And so what price is doing here now is it's starting to change the momentum to the downside as it started to fill this high, meaning prices started making lower lows, lower highs, lower lows, lower highs, lower lows. So this is the uptrend, this is the downtrend. Over here is the downtrend, and this is the uptrend. Price is making lower lows, lower lows, lower highs, lower lows, lower highs. Then price is making higher highs, higher lows, higher highs, higher lows, so on. So this is our low. This is our high. As we don't know the structure behind us, this is our higher low. This is our higher high. This is our higher low, higher high, higher low, higher, which means this is the uptrend. Price is an upside. What actually happens here, right? Price fails to break this higher high by making, if it doesn't make higher high, it doesn't break the structure, it doesn't make higher highs. So what it actually does, price retraces, so this is low. As price broken this higher low, so this becomes a new low. This is our higher high, higher low, sorry, lower high, tripping. And this is our lower low. This is our lower high. This is our lower low. Lower high. And this is lower low as well. So as you guys can see, here is momentum changing. As price can break this high, price is shifting to the downside and price is changing. Okay, so let's say this is 1 hour time frame, right? This is all you see is 1 hour time frame, and price is coming to our POI. Let's just forget this side of the section. Price is coming to our POIs. It's making higher highs, and this is our POI. Let's just say that, right? Point of interest. POI is a point of interest. On a later video, we'll be talking about how to identify POIs, but for the time being, this is a point of interest where we can expect rejections, okay? So what price does? Price fails to break this area. And what you guys need to understand, right? On top of this structure, higher high, top of this higher high, on top of this higher high, this higher high or high, there is liquidity, which means there is money. And if the money is already taken out, most of the money, then price can shift to the downside. And how do we identify if there's money on top? We look at volume. Volume will tell me if the money is taken out or not. Okay, so on top is volume, but what is at the bottom on every of them is a supply zone. So here will be a supply zone, here will be a supply zone, here will be a supply zone. And you need to figure out if the supply zone is stronger or not. We'll be looking later on as well. But this is the reason why price failed to break this high, because the liquidity is already been taken out. That's why price failed to break a higher high. I'm going to be doing the exact same thing for here. Don't want to waste much of the time, so this is our high. Low. That's easy. Low high. Low. Low high. Low. Low. High. Low. consider this area as our POI, point of interest. This is our high. This is not a confirmation. This is the high and low. This is our higher high. Higher low. Higher high. Higher low, and so on, so on. We move into the upside. Liquidity is underneath here, underneath here, underneath here, all the lower lows. The last liquidity that's taken out, right? We look at the actual demand zone. Price comes into the demand zone, look for high highs. A safer entry is when this lower high is broken and high highs are formed, and then on the retracement back, we can buy price to go higher. Okay, so how the candle will look on a daily time frame? Let's look into it. So this is 1 hour time frame. Just to say that on a daily, it could look like this. This is a daily candle. Exact same way. This is how exactly like that. This is how the daily would look. On the other side, this is how the candle would look like on the other side. So the third market structure type is consolidation. Okay, this is where the price will range within an area. So it will create structures on a lower time frame, but on a high time frame, it will stay in a zone, in its own structure. So you can mark it down. So this is our high, low,
this will be like double bottom, so we're going to count this. This will count as 1. This will be lower low. This will be our new high. Yeah. Low. This will be our lower high. This will be our lower low.
So as you can see, structure's basically baking to the up and down, up and down, up and down. It's not actually moving to the upside or the downside. So that's why it's called consolidation. It's within the range. This is like within the range. So this area can be seen as accumulation, where price main intent is to move to the upside by taking the liquidity from the bottom side. Okay, and this is distribution. Is basically opposite. Price aim, market maker's aim is to push the price downside. Right, I'm just gonna throw these low highs, high lows, low lows as fast as possible. So as you can see, this structures keep on breaking to the upside and downside, upside and downside. So it's ranging within this area, and yeah, this is basically consolidation. So we shouldn't be actually trading within this area, but we can enter when there's the actual break of structure on a high time frame. So on a high time frame, maybe you can see something like this. Something like this. Okay, wait, color hasn't changed. Something like this, 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 and this. But in all fairness, it's just ranging. So what can we do? We can look for entries after this area is taken out, which is lower low. And then if price makes higher, then we have a confirmation that price wants to create a high. Then we wait for a high to form and we enter. But in all fairness, this is the lower time frame, this is the high time frame. Okay, let's say this is 1 hour time frame, right? What would it look like in a daily? Daily, it would look something like this.
Maybe something like this. As price is not sure, so this is our daily look.
Daily. And this is exactly the same thing. I mean, I can do this for you guys. I'll speed the process, but yeah, it's quite long. But I'll do it either way.
So this will be our high low. This will be our high. This will be our low. This will be our lower high. This will be our lower low. Okay, and this will be our, look at this will be our high high. So our low high. This will be our high low. Oh, sorry, lower. Low.
So on and so on and so on. So yeah, guys, this is all you need to know. One thing you need to know is trading on a consolidation area. You have to look structured differently, and you have to look at different time frames. So you have to keep that in mind as well. There you can.
And we'll look at this maybe. So we have daily candle. Something like this.
Okay. This would be a daily candle. Okay, so I hope you guys understood this. I forgot to mention this, but on consolidation, it is recommended not to trade in the middle. If the consolidation is happening in your POI, then you have to look for a break of structure, and you have to look for if the liquidity is being taken out. If it's taken out, then you can enter. And I have said it previously, you need to use volume to find out the liquidity.